we help consumers finding the loan and we help lenders to deploy their capital to the consumers. If you're a prime customer, you're already sorted. Your banks are chasing you. But if they decline you, then your struggle really starts.
We get the similar, I'd say, same sort of customers, what you're talking about, in that don't fit into the traditional sort of blocks with the banks.
What we find out that a lot of these customers are actually not very risky customers. They're actually better customers. They're more sensible, responsible customers.
Generally, the UK market is, I would say, is quite in a difficult space right now, and I think everybody's probably nervous about the autumn budget that's coming out.
So in other industries, when there's more demand, it's a golden period for the businesses. But in creative industry, where there is more demand, it's a stress.
How are you seeing the world of AI, and
In next 10, 15 years, AI will transform, will disrupt many businesses.
maybe I should be looking at investing into consumer lending then?
100%. And if you ever have any plan, you know who you have to speak to.
Sort of 2026, what's your sort of achievement goals or milestones that you're focused on?
So at the moment, what we are doing within LoanTube is like we are.
Welcome back, everybody, to the Wise Wealth podcast. It's been an awesome series. We've had some great guests on the show. And just want to say a big thank you to everybody that tunes into this podcast. Hitting the top 100 UK finance podcast has been awesome. And we plan on getting into the top 50 very soon. So I've got a really good and awesome guest on the show with a great story. So I'm going to let Gurpreet introduce himself. So over to you, Gurpreet. Thanks for joining me on today's episode.
Samuel, yeah, thank you for inviting me. Hi guys, I am Gurpreet, the founder and CEO of LoanTube. So LoanTube is basically a loan finder platform. We help consumers finding the loan and we help SMEs find the loan as well. And on the other side, we help lenders to sell their loan, to deploy their capital to the consumers and to SMEs. And as a platform, we do everything in between the process. Yeah.
Okay. And so like if we look at sort of LoanTube, so you're an intermediary. Are you basically a broker, would we say? Like as in you've got lenders on one side, borrowers on the other side?
So yeah, I think calling us broker would be a right thing, and we see ourselves more as a tech savvy, like as a very tech savvy broker. So when you say broker, the first thing comes to the mind is like analog style of brokers. We are broker, yeah, technically we are broker, but we're very tech savvy, like we are digital broker, the broker of the
Okay.
future, you can say.
What made you sort of create what? So where did LoanTube come from? What sort of scale and size has LoanTube got to?
Yeah. So the idea of LoanTube came to my mind in 2016 during a phase of my career where I was searching for idea. I was doing a lot of research to find the idea to start a business, to build a business on. And because of my past credit industry experience, I very quickly spotted a gap in the loan comparison space, in loan brokerage space, and I very quickly realized it's broken at the moment and someone has to fix it, and I decided I'll fix it. Yeah,
Okay. And do you think you've achieved that?
very much. Yeah, very much. So the idea, we started working on the idea in 2016. It took me more than a year to get FCA permission because of my Indian origin. I was not based in UK, so the application process was slightly lengthier. But after getting the FCA approval, we started working on the idea. It took us many hit and twirls, many MVPs, make and break, and then in 2019 we achieved the USP. So we launched with a couple of lenders in Jan 2019, which made us one of the first real rate loan comparison marketplace of UK. And when we say real rate, we really mean the offers we show to the customer on our platform are real guaranteed offer. Like what they see is exactly what they get in the end from the lender. So there's no teaser rates, no indicative rates, all real offers.
Yeah, interesting. And so who do you have multiple lenders that work with you that do it? Are those high net wealth individuals, family offices? Are they funding lines? Who's the lenders that's lending to your
So yeah,
customers?
yeah. So we have two legs of our business. One is consumer loan and one is SME finance commercial loans. So we started with the consumer loans in 2019, and the lenders we have on our panel are non-bank lenders. The main reason behind that, the segment we identified is the underserved market, underserved population. is basically non-prime segment, and banks usually refrain to deal with non-prime customers, and these are the customers who usually struggle to find capital support when they need when they are in need of support. So if you're a prime customer, you're already sorted. Your banks are chasing. You already have many pre-approved emails and SMSs in your app and notifications in your app. But if you're not a prime customer, then your struggle start. You just don't know where to go because your bank has declined you. And if and in most cases, customer first go to the known brands like Money Supermarket, Clear Score, because they have been in the market for a very long time, so people know them by their name. But if they decline you, then your struggle really starts. You go to Google, you fill up many applications on many different websites, and you just don't know which one is the right lender, which one is the right website for you. And then the requirement of platform like us comes, and we are one of the last resort for these customers, because what we do when customer come to our website, they just have to fill up one single loan application form. They stay on the website for few seconds. Within few seconds, we do our magic. We find the right loans for them. We present it to them, and then we leave it to the customer. The USP, the biggest strength we have is like our transparency, our honesty to the customer. We
Yeah.
don't influence the decisioning. We just show everything what is available to the customer, and then we leave it to the customer to decide whether they can afford it, whether they want to go ahead with the loans or not.
Yeah. So is it all unsecured lending that you do?
On
Do you,
consumer, yes, on consumer loan side, we do unsecured lending. On
what,
commercial finance, we do different type of products. So one other big difference between consumer loan and commercial finance, consumer loan is regulated, commercial finance at the moment is not regulated. So lenders are more creative. They have created different type of products for SMEs like invoice finance, MCA, revenue-based loans, unsecured loan, secure loan, asset bridging. So they have many different type of products at the moment. But also the difference between consumer and SME is like SME finance, in SME finance space, lenders are more analog, like old style lenders. They don't have systems. They just don't know how to use technology or modern day technology. And because of the limitation these lenders have, we also have limitation, because we can be as good as our
yeah.
lender, our partner lenders are. However, we are working with many lenders now to enable them to be able to use more technology to make the process faster and more efficient, so
I
that they
feel
can
like
business with less.
it's quite interesting because you probably don't know my background either, Gurpreet, and I just sit there and think, actually, I sit on the board of a £500 million secured bridging lending company.
Yeah,
We
yeah,
just got funded from AB Carval,
yeah.
from TAB, and all of our underwriting is pretty much we've got AI driven models that are now doing all of the AI underwriting, pushing all of that side forward from the tech. But it's very interesting what you're doing. That's
Very
why I was like,
operation savvy. Yeah, yeah.
yeah, it's we're very much tech driven. We have our own in-house tech team, but yeah, we get the similar, I'd say, same sort of customers what you're talking about with that don't fit into the traditional sort of blocks with the banks, and then they looking for outside. But we don't do unsecured lending. We do secured
Lending,
bridging
yeah,
lending.
yeah, yeah.
Yeah, very interesting. So it said on here, you do over 300,000 applications a month. That's crazy.
Consumer loans. So the fact is, when we started this business, the population of non-prime customer was 12 to 13 million. And
Yeah.
over a period of last few years, because of different reasons, inflation, COVID, less employment, all those sort of reasons, the population has increased. So some data sources say the population of non-prime customer is about 20 million now, which is a very big population, like one third of the country. Actually, 40% of eligible population is non-prime now, and the demand is there. There used to be some high cost lenders in the past, and because of different reasons they're not in the market, but demand is still there. Those people are still there, and there's a big vacuum. Even though we process these many applications, we see a big vacuum in the market, and we the market is actually open for the disruption. The right lenders has to enter the market to disrupt it, to help more customers. Yeah.
Do you, I suppose you might not even have that data, but like maybe you do because you're so tech driven, but do you get to see sort of like the redemption rate, default rate? Do you get to see that sort of information? So that's interesting in general. I don't know if you can share that just for like sector wide, someone that's getting 300,000 applications, sort of like what is the average consumer? default rate. That's pretty crazy, I suppose. I suppose it's probably quite high, isn't it?
So supply is very demand is very high, supply is very low in consumer loan in non-prime space. So a lot of these non-prime customers remain unserved, like they get declined, like they keep applying for loans, they keep getting declined. And because we are data driven business, we analyze data deeply on a routine basis. What we have realized that most of these declining customers are actually not very risky customers. They Some of them just don't have any recent credit repayment footprint, and recent credit repayment footprint is a very big well, like lenders give big weight to recent credit repayment footprint in their underwriting. If you don't have any recent credit repayment footprint on your bureau file, is lenders just can't assess your file. They just don't know what's your payment attitude is towards your
Yeah.
financial obligations, and then they decline your application because if they can't assess, they can't approve it. The next best thing they can do, they have to decline. They can decline your application. But when we go deeper into data, what we find out that a lot of these customers are actually not very risky customers. They are actually better customers. They are more sensible, responsible customers. They did not take any loan in past 2, 3, 4 years because they did not need the money. Yeah, but again, uh, so lenders have binary decisions, just yes and no, and we are trying to change it. By the way, at the moment we're building some product to help lenders serve more of these customers, and we call it credit enablement, not credit building, but credit enablement. There are many credit building apps in the market, but credit building, and they just charge you 5, 10, 20 pound per month to report your Netflix or Sky payment to bureau.
Yeah.
These subscription payment never impact your underwriting, lending underwriting, because lenders don't consider the subscription payments anyway. They consider your credit repayments, and your affordability, and how much you're spending, where these sort of things in their affordability assessment. So, and because we are broker, we work with many lenders. We host many lenders end-to-end underwriting within LoanTube. We have a wider we understand what is important, what is not important. We're just trying to build a solution for the customers who are getting declined because lenders can't assess their profile, or currently lenders see them very risky, but we don't see them as risky. So yeah, the product development is going on at the moment, and we call it Credit Tube to enable the disabled credit customers.
That's
So
interesting.
yeah, so financial inclusion is basically divided into three parts: banking inclusion, and we have many neo banks now. Like you can open any bank account,
Yeah.
any number of bank account instantly. Second side of financial inclusion is payment inclusion. There are many payment tech companies, Google Pay, Apple Pay, and many payment methods to pay the payment. The third side of financial inclusion is credit inclusion, where we don't have fintechs and other companies working, because for the credit inclusion you first need to have a lot of industry experience, lot of hands-on experience in the credit space. Only then you can find out, okay, what are the gaps, what are the problems, how to fix those problems. Because in other two sides of financial inclusion, you just need to build a product. Yeah, there's no underwriting, no deep underwriting involved. AML, fraud checks, KYC checks are there, but in credit inclusion, their deep underwriting assessment. If you don't know the underwriting, if you don't know what's the important things in your bureau profile, what's the not important thing, you just can't do anything. Yeah.
Yeah, that is interesting. So, in general, do you know what the default rates are that you've seen? I'm not assuming it's not like tied to any one lender because there's lots of lenders, but across your, I don't know if you want to call it your portfolio, what would you say is like the consumer, that stuff in that it sort of intrigues me just because obviously generally the UK market is, I would say, is quite in a difficult space right now, and I think everybody's probably nervous about the autumn budget that's coming out.
Yeah.
I mean, your business will probably thrive off of the back of the autumn budget. I would assume as more people need more readily available credit, right?
So the credit industry works in opposite direction. When there's more demand, it means there's more stress in the market, and lenders refrain
Yeah.
from taking more. So in other industries, when there's more demand, it's a golden period for the businesses. But in credit industry, where there is more demand, it's a stress. We see it
Oh,
as a
really?
Lenders see it as a stress in the market, and they just tighten their
They tighten them.
criteria. So. However, you ask the default rate. So we see between 6 and 8% default rate among our partner lenders on average basis. But that reflect like the pricing of the loan for this segment cover of trade-off for that sort of default rate. And also a lot of customers who default the payment are actually not defaulting the loan at all. Like they just don't have money in that particular month. They want to post pay or reschedule the payment plan, which is not very bad because you already have high pricing, so which covers off the cost for the later or the longer repayment period. Yeah.
And is that the same in in the commercial space rather than the consumer?
Cool. So just like consumer loans, is the S of SMEs in the SME space, which are underserved and unserved. And because we have championed the unserved segment in consumer loan space, we want to do the same for SMEs as well. And also the fact is the S of SMEs, which employs most number of people in the country, and their backbone. And nobody is because usually their loan requirements is very small, and operations are still the same. Doesn't matter if your loan is small or big, and there's big operation cost involved, and hence it doesn't make a lot of sense for many lenders to serve the S of SMEs. But we, just like I mentioned, we are a very tech savvy broker. We want to use technology to reduce the cost of serving this SMEs so that the more capital available for these SMEs. And if these SMEs flourish, they employ more employees. And when they employ more employees, more people have more money to spend. And when more people have more money to spend, they spend more. And it's a cycle like which helps the whole economy. So we think S of SMEs are very important, and we should be helping. We should be building solutions to help them. Yeah.
Out of the 300,000 applications that come through a month, how many of those actually get to the final, they get a loan?
So 300K applications are for consumer loans. That much volume we process in the consumer loan. So in consumer loan, what we see, 20% of the customers get one or more offer. 80%
No.
of the customers get declines straight away. There's a
Wow.
very big untapped open opportunity available for us on the table, and hence we are building solutions to basically serve this 80% of the customer, because it's a big population. Every
Yeah.
month, with 40,000 customers going empty-handed from your store. You don't want them to go empty-handed. Yeah.
Yeah.
So we're building solutions for them. On the other side, on SME finance, it's a comparatively newer arm of our business. We started it more than about a year ago, and at the moment we process 100 plus applications of SMEs a day. Yeah, because
Okay.
it
Well,
requires a human element as well. Like the more applications you generate, the more humans you need, because the more people have to work with more analog lenders. So yeah, this is comparatively smaller side of our business. But in SMEs we have better conversion rate, like 30-40% of the customers get approved by the lenders.
wow. So, I mean,
Again,
like,
the pricing is high. The
I
pricing is
think I bet you majority of your time is just spent like data mining the 80% of people that were rejected, right? That's probably where a lot of the attention
So
goes to see.
last 2 weeks, I am just spending my entire time on reading credit bureau data of these 80 percent of the customers, because it's a big population, and it's not good to leave them on their own, because if nobody help them, like they just don't have options. And most of them are like innocent people, like humble innocent people, like they just need 200 pound to buy clothes, school uniform for their kids, because September has come, and if nobody give them the money, it's not good for society anyway. So we are very mission driven. Like we really want
Yeah.
to help as many customers as we can within our capabilities, and if we require to build more capabilities, we will build more capabilities. But it's a mission driven business, and we want to help the customers who nobody is helping.
Yeah. I suppose one area you haven't really touched on is how on earth do you even get into a position where you're getting 300,000 applications a month? That's a vast amount of applications. Is that through ad spend? Is that through just organic reach or referrals, word of mouth? How have you got to that situation?
So referral marketing, performance marketing, affiliate marketing are big marketing channels for us, and most of these customers come from these three marketing activities. And we also have a lot of repeat customers, like who just know LoanTube by name, and because of one of their friend or their family member got helped by LoanTube. So we see a big portion of customers coming by word of mouth as well. But majority of the customer come from performance marketing, referral marketing, and affiliate marketing.
Yeah. So with your head so in the weeds, so to speak, of looking at that data, do you look more at the broader economy? Like, do you look at what's consumer spending doing? Are you concerned about the autumn budget? Do you review any of that information?
So this budget related things are more macro, like they impact more macro level economy rather than these individuals like who have just very smaller loan needs, or yeah, they are anyway like living paycheck to paycheck. Like these are the people like who struggle to save because their paycheck is very small, or the cost of living is very high, and for different reasons. So I don't think the budget will have bigger or big impact on the lives of these people because they're anyway in a stressful stage in their lives. So the impact would be more on the ones who make a big salary or big paychecks, and might be on businesses as well, but not on like this portion of the
Yeah.
population.
What is the average sort of loan size on LoanTube?
So average ticket size is 2,200 pound roughly. Yeah.
Wow. So it
It's
is
small
super.
tickets. Like these people have smaller requirements. Like they are really like innocent, hardworking, humble people. They just need some support.
Yeah.
So maybe once or twice a year during some fixed months to bridge a gap between something or like two events, and yeah, and they just get declined for random reasons.
And
Yeah.
so if you're looking at that, that's crazy, isn't it? That people going out to get £2,200 loan. What sort of term is that over usually? Is that like a 12-month thing? Is it
18 months. So average tenure is 18 months.
18 months? Wow.
Yeah.
Yeah, that is crazy, isn't it? It makes you think what sort of situation you've got to be in to go down that route and to do it. I think it's a very humble job. I suppose it depends though. If they're 6 to 8% are going into default and then they're getting slapped with late payment fees and God knows what, then it's quite strenuous, I suppose. But yeah, look, it's an awesome business. I suppose from your side, how are you seeing the world of AI and how is AI being implemented into LoanTube?
Yeah. So for many of the audience, AI would be a comparatively newer term, like 3 4 years old term, but we started using AI much long ago. And one of the strength of our infrastructure, our system is like the ability to make those high level predictions in advance for multiple things, to find the right lenders, to find the probability of how the lender would react to the customer, even after approving the application, how the customer would react to a loan offer. And because we have all these capabilities to do these thousands of calculations in real time within matter of a few seconds, we can ensure the outcome is not only best for the business, but is best for the customer as well, because we can in real time understand the customer, understand the need of the customer, understand the financial situation of the customer. But you can only do that if you have built the foundation of your system, or the foundation of your infrastructure in a way which can do all those sort of calculations in real time, because customers don't have patience. Like you can't keep them on hold with a processing message for half an hour. You only have few seconds to make your end-to-end decisioning, and then you have to communicate through APIs with lenders also. So the system has to be very sophisticated, very fast, and this is what we have achieved in past few years.
I suppose is your AI just constantly analyzing the client data, the redemptions, late payments, so you probably got like a very strong view of what the average customer looks like and what
Correct.
the
Correct. And what would be a good option for the customer, what the customer should be taking, and which lenders are the right lenders for the customer. So we already know in advance, even before we have communicated with lenders through APIs. We know in advance what going to happen, what is going to happen with the customer, what customer would prefer. But
Yeah.
again, you need a lot of data and you need a very sophisticated system to be able to do so. Yeah.
Yeah. Do you think you'll ever become the lender?
Very recently, a lot of fund houses and investment firms, private equity firms have reached out to us because of our massive distribution machine to be not for us to become a direct lender, but to help them deploy their capital
Yeah.
into the consumer lending because we are living at a very excited times. So government is now aware that there is no capital, like people don't have money, people are money deprived, the country is money deprived. FC has now realized that they have over-regulated some things, some few areas of consumer lending. Media
Yeah.
is talking about how money deprived people are. So it happens very rarely in lifetimes that we see all these three big forces singing the same song and in the same tone and want to achieve the same thing. And we are sensing like we are forcing that in near term lending would become more lucrative and more easy for foreign investors as well. Like we are seeing
Yeah.
good interest from American investors who want to deploy their capital into the UK market. So we are having some discussions with these firms to understand what we can do as a broker, what we can build so that it's easy for them, it's quick for them to deploy their capital into the market. If they want to deploy their capital, it should be easy. The access to capital for consumers should be easy, and deployment of capital for the investors should be easy. So we are definitely working in that direction.
What sort of like, we spoke about the average term in 2.2K, 18 months. What's the sort of average rate that these borrowers are paying?
So I'm not sure if you are aware about the term APR, rep APR, but in UK, the requirement is to show rep APR, not the interest rate for consumer loans for regulated products. So rep APR include interest cost and include other direct and indirect costs related to a loan product. Our rep APR is 79.5%, which means yeah, if you borrow £1,000 for 18 months you pay back roughly like 1800, 1600 to 1800 pound. I don't know the exact figure in my mind, but the cost it becomes 1.5 or 1.6x of what you borrow in 18 months.
So
So if you borrow
70,
£1,000 you pay back 1500, 1600 pound back to the lender.
so that's like 50, 60% gain, isn't it?
Yeah.
Wow.
Yeah.
I wonder
But
why.
again, the cost of capital for these lenders to serve this segment is very high. The operation cost is very high. Ticket size is smaller. It doesn't matter if your ticket size is £1,000 or £10,000 or £100,000. The cost involved in lending or fulfilling or completing the application process is more or less same. So hence, because of the high cost involved into lending a loan, the cost looks like higher.
Yeah, I mean that is a lot, isn't it? I suppose as long as defaults stay low at 8% and you're picking up a 60% yield, that's pretty impressive. I wonder what the actual yield would be to the lender. Blimey, maybe I should be looking at investing into consumer lending then.
100%. And if you ever have any plan, you know who you have to speak to.
Yeah, I'll be coming to knock on your door. At the moment, it's nice to have the secured side, having security on the back. But obviously, with this, you don't. I mean, I don't understand. Surely,
Bridging loans are so expensive. Like we work with some bridging loan lenders. The cost customer has to pay is enormous for a secured loan. Like you don't have a risk. Like you don't give full 100% LTV to the customer and still charge enormous cost.
what sort of rates are you getting in the bridging space, just out of interest?
So I think between 15 and yeah, around 15, 16, 17%. Yeah.
Right. Well, we need to have a conversation then because we're doing bridging at like
I'll connect you.
three.
Yeah, I'll connect you to a team member who deal in
100%.
yeah, yeah.
We do bridging at 3.5 over base. So we're at 8.5, 9. Um, we do bridging and commercial lending at that. I mean, the sort of crazy sort of spec of bridging loans could be like, a care home, not the best borrower would be at 12%, but we're nowhere near 15. So that's definitely worth having a conversation
Yeah,
for sure.
yeah, yeah,
Yeah, and we're trying to do not we're trying to do similar to you. We're trying to help people out that need money, that have an asset that want to either refurb it, do it up, or purchase it or auction, or you
yeah,
know make a change. And it's yeah, we're not far off of that. The default rate that we're at's just under 6%. So, and
yeah.
that's on secured lending. So it's quite impressive that you're at 8 on unsecured. I wonder what the late payments would be though, assuming that's probably more like 9-10%, surely.
Yeah, it will be higher, and we are aware because of the feedback we get from lenders that if a loan is of 12 months, customer don't pay in 12 months, they go to 14, 15, 16 months, and lenders are also very cooperative with the customer. They allow the customer to restructure the loan, to ask for a payment holiday or grace period or things like that.
Yeah.
Because this is a segment where people are really needy, like they really live hand to mouth. They don't have much flexibility. If they don't have money, it's better to give them some option rather than putting them on a default.
Yeah. Yeah. No, I think yeah, exactly that. It's better to either do an extension or roll it out by another 6 months to see what they can do. That's pretty
Yeah.
exciting. So I suppose like what's the future looking like for LoanTube? You're saying you don't look at the macro side of things, but I suppose you will theoretically indirectly see that anyway from your lenders, right? So your lenders would naturally tighten up.
There is a possibility for that, or increase the cost rather than tightening up. Yeah, if their capital has become expensive, their operations have become expensive, then they'll increase the cost, which is one of the possibility. Uh, However, because we have seen many ups and downs, many tides in past few years, we are very sure that the demand would remain more or less same. People would still be demanding a loan. These consumers, they live on credit. So on the demand side, I think we won't see much impact. On the supply side, there might be some impact. Yeah.
Yeah, very interesting. So moving forward with LoanTube, if we're looking at sort of 2026, what's your sort of achievement goals or milestones that you're focused on?
Cool. So at the moment, what we are doing within LoanTube is like we are repackaging our entire infrastructure to make it more AI age ready. So what we think that next 10-15 years will be like the AI age. We call it AI age, and in next 10-15 years, AI will transform, will disrupt many businesses, the businesses who are running in some standard way for 15, 20, 30, 40 years. So AI will transform them, and AI will force these businesses to change the way they run at the moment. And for a business like a tech enabled business like us to be able to benefit or yeah, benefit from the capabilities of AI, your infrastructure should be flexible, should be ready to be able to communicate smoothly or in harmony, to work in harmony with the other AI tools. Using a chatbot or using some off the shelf AI products doesn't make your business is AI, doesn't mean your business is AI ready. For you to be AI ready, your system should be flexible, like should be able to speak to AI tools. And this is
Yeah.
what we are trying to do at the moment. We want to become like a go-to source of capital for borrowers, and we will want to be available at the source. If it's a third-party platform where we have to do embedded integration, will be doing that. If it's like uh, basically where the source is, where the capital is available, we want to make it easy for these capital holders to deploy the capital to the market. So yeah, embedded finance will be one area, and using AI tools in coming years will be other big thing for our business. Again, the goal is to make credit, make loans easy for customers.
Yeah.
Yeah.
Wow. Well, it's awesome. Thanks, Gurpreet, for joining me on the podcast. It's been really interesting finding out a little bit more about what you do and the business.
Yeah,
For
yeah.
anybody that wants to find out more about you, where should they go to look you up?
Yeah, it's a loantube.com. They can go to Google, they can search our website, Google or Safari, where whichever they use. They can also search us on ChatGPT. So we are available on ChatGPT. Customers can apply loans on ChatGPT even without
Can
using
they?
ChatGPT. End-to-end journey on ChatGPT.
Right, that's an interesting conversation. I was about to say see you
So
later
our
then.
chat GPT is fully connected to our backend. You don't even have to leave chat GPT. You can fill up application form on chat GPT. However, the way chat GPT platform is built at the moment, you would have to search LoanTube GPT to be able to apply. You can't directly apply in
Yeah,
any random chat.
you've got your own
You have
GPT.
to
Yeah,
search. We have built our own GPT. If you look up for LoanTube GPT and you fill up, you start talking to it, it will help you fill up application form on LoanTube.
that is awesome. Really
Yeah.
cool. I'll definitely be
Yeah.
having a look at that just to dig a little bit deeper. But thanks so much for joining. I really appreciate it.
Thank you very much. Thank you.